Yo man, if you haven't joined our Telegram channel, click the link on the description box. That's the first link. Click it and join our new Telegram channel, man. We are booming right there, man. You know, we're doing the most. If you want the exclusives on Boom and Crash, just click the link down below. But then other than that, man, this is the new thing that I wanted to do. Guys, you know, tell me if you really like it, because you know I'm going to start to be analyzing the market for you. Maybe like I'm going to start on Tuesday. It is obviously boom and crash. And I'm going to accommodate each and every one, whether it is the spikes or the ticks, you know, just analyzing the market, you know, at the beginning of the week, just so that you can predict the direction of the market for the whole week. And then I'm going to analyze it also on Friday and post it on a Saturday, just so that you can also analyze, you can also predict the direction of the market on a weekend, man. So tell me if you really like this type of method, man, because I really want this to be a productive thing, an educational thing, because you know it is only fair if we do it this way. But then it is not only this way, because I know that people who also like indicators, man. So I'm going to do analysis, and some other times I'm going to do indicators, man. I'm just going to accommodate each and every one, man. So just tell me if you really like this way. Just going to start analyzing, just so that you can get the direction, and then you will just go to small time frames and look for entries, man. So yeah, that's watch the video, man. This is our boom 500, right? We start on a higher time frame. Cool. You can check on your weekly time frame. We have been dropping massively. But then, guys, you have to know that, okay, if the market has been doing this, if the market is doing this, and then when the market comes down, then it comes down in this way, which is called a corrective way. In this way, I want to show you all something. In this way, it shows that when the market gets to that significant level, which is this one, it is going to reject and possibly give us a reversal. When the market keeps on coming down like this, you know, we probably going to get a break of a trend line, and then retracement, and then we will shoot to the upside. So this, you know, this is just me showing you something, right? Because this is what I already see. This is what I already see without even analyzing. I can already see this. So this is what you would have, you know. Maybe this was a support or a supply, a demand actually, and then you see the market would break, retrace, and do whatsoever. So let's delete that. That's not important for now. But then let's get straight into it, man. I don't want this video to be too long, man. So you can see that the market has been coming down, but then you can see now it is kind of starting to lack the momentum. You know, that speed, you know, it is starting to fade away. You can see, all right. You can, let me put it there. You can see, okay, the market might, you know, we not say it is going to, might end up breaking. And then after it breaks, it might end up, you know, retracing and then shooting to the upside. But then, you know, there are a lot of possibilities, you know, on the market. But then this is the weekly time frame. We don't analyze here, we just check the trend and everything. Okay, so what we see on a weekly time frame is that we're going down, but then you should not be narrow-minded. You remember, you can see you have a strong significant level right there. You have a strong significant level before even getting to the trend line. So that's it. Let's go to our daily time frame to analyze. So you can see, okay, meaning the market has been coming down, so we might be respecting this previous support to make it a resistance. So let's go to our daily time frame. Okay, so this is our daily time frame. So on our daily time frame, we're going to mark our highest level. This is our highest level on our resistance right there. This is our lowest level, right? That is our lowest level, right? Okay, so as we get here, we're going to trade within this range. Remember that the first thing that we did, it is to check the trend. The trend, what does the trend say? It says that we're going down. Cool. The second thing, we're marking the structures. These are where we're going to play around. Okay, so on our range we have this structure. If you can see properly, this is pure price action, man. This is pure price action. We have this structure right here. Exactly. So meaning, what does the market have to do? It have to calm down for the third touch, and after getting a third touch, it is either we're going to break, retest, continue to go to the downside and finish the 90% rule, or it's either we're going to get the third touch, and then after getting the third touch, we're going to shoot to the upside and end up doing what? And end up breaking that weekly trend line that I showed you. All right, I hope you get me. So we're expecting the market to calm down, right? So this is the structure that we have on a daily time frame. Let's dive deeper into the 4-hour time frame. So as we get to the 4-hour time frame, what we're going to do is that we have the structure, right? Now what I see a trend inside a trade. I see a trend line from here to here to there. So this is what I see. So you can see, all right, meaning that the market there, remember, this is our daily structure, and then this is our 4-hour structure. So you can see that the market was pushing to the upside, and then when it got to this weekly resistance, it respected it, with a double top. So a double top shows you, okay, this market has a strong momentum. If you can see right here, if you can see right here, we had that double top, and then you see that the market broke our trend line, and then right now it just retraced inside of it, but then it is trying to trick us. But then when the market does that, guys, we can also trick it, so okay, this is what we see. So remember that the overall trend, it is down, right? So we're still looking for selling opportunities. So this is what we have. So we're gonna go to our H1 time frame. As we get to our H1 time frame, remember that, okay, the market went up, played around here, gave us a double top. It came down here, and then as you can see, what you have to see is that, okay, now the market is coming down in a series of impulse, correction way, impulse, correction, and then, so what do you expect? You have to be expecting an impulse to the downside, right? If we are being realistic. But then before you do that, we have to mark our important levels, right? We have to mark our important levels. So remember, okay, if the market broke this important trend line, we have to mark the significant levels, for the 90% rule, for in case, it's obvious when the market gets here, it will react, and go up, and then maybe break, and then do whatsoever it does. So okay, that's what we have. So you can see now what the market did. It broke our trend line, and then it decided to come back inside of it. But then we will have our management trend line from here, if you can see properly. So you can see this is our management trend line. This is our management trend line. You see? So this market cannot trick us. We have to trick the market. If you can see, this is what we have. The market bounced here, and then it broke our trend line. It decided to get back inside of it. So as the market get back inside of our 4-hour trend line, you know what we were going to do? We have our management trend line, which is this one. This is our management trend line. So after the market gets inside the trend line, the forward trend line, we are going to sell the market. This is a retracement. We're going to sell the market when it gives us this third touch. So this would be our first touch. This would be our second. And then this would be our third touch. This is where you were going to sell, right there. But then, guys, I don't trade ticks. I trade only spikes. You know me. So this is where you were going to sell. But then you wouldn't only just sell on a 1 hour time frame. You'd go to your M15, and then you would also have another management trend line, as you can see right there. But then technically this is a continuation pattern. It is a continuation pattern to the upside, but then this would be your management line. Why? You would wait for the market to come here, bounce. After it gets there, comes back up, and then when it gets here, what it would do? It would respect this level. As it respect this level, it will also be respecting the third touch, which is this one, and then you would sell from there. You would sell from here to downside. Let me go to a higher sub frame. Then you will sell from there to here. It will bounce, do whatsoever, and then you will get your third touch on a higher time frame, which is here. This is your third touch. So man, yeah, that's it for Boom 500. I'm only analyzing the a single thing today. Guys, this is just me showing you how you would do this, man. It is so easy. Tell me, guys, do you prefer this? Just so that you guys can be able to predict the direction of the market, just so that you guys can also be able to trade, man. Just tell me, what do you think about this? Just it is just for us to be able to produce more videos, because guys, if you can keep on producing the same videos of indicators each and every day, the indicators are going to be even finishing. We're going to finish the indicators from the MetaTrader, man, and we're gonna end up using the lagging indicators. So man, yeah, that's it, man. You can see this is what we have, man. This is so easy. This is pure price action. So you can see that the market has been coming down, man. So it is only fair for us to look for selling opportunities. It is only fair for us to look for selling opportunities. But then I wouldn't trade this, because I trade only spikes. You know me. So yeah, see, it is coming down. As it's coming down, we went to our 4 hours. As we went to our 4 hours, we had this structure right here. This structure on this trend line, and this one right here, and then this is what we had on our 4 hour still. This trend line right here, and then the market broke it, and then we went to our 1 hour. As we went to our 1 hour, you can see that the market broke our 4 hour trend line. Let's see the candles of 4 hour. Did they close? Yeah, they closed. It broke our 4 hour trend line, but then it ended up coming back inside of it. But then it wanted to trick us, but guess what? We ended up tricking the market. We had our management line right here, and then on the third touch, this is where you would be able to say, okay, I'm about to sell. But then when the market got there, you would wait for rejections, for pin bars and everything. Then when the market goes back down, you would go to your M15. When you get to your M15, you see you had this structure. You would wait for the market to give you a third touch on the buy side, but then you wouldn't buy. And then when it gets here, you would wait for it to retrace. As it retrace, it would be respecting the previous lower low, and then you'd be able to trade it when it rejects on this third touch, man. So that's it. That's it, man. That's easy, man. Thank you, man, if you stayed up to this far, man. I appreciate you so much. Tell me, guys, if you want this type of method. I'm just doing this just for you guys to maybe, you see, if I do it on a Tuesday, you'd be able to predict the direction of a certain index for the whole week. If I also do it on a Saturday, you'll be able to predict the direction of the market on the weekend, man. So, man, yeah, man. I think this would be a fun way to do it, and a proactive way, because this is getting to be now an education thing. I just don't want to show you guys each and every time it is the indicators. That people who like to analyze the market. So I'm trying to accommodate each and everyone, man. So, yeah, man. Thank you if you stayed up to this far, man. Subscribe and just hit the like button, man, and comment something positive. Comment actually telling me if you like this. Thank you, man.